AVV Nation, what's going on? It's Patrick here at VectorVest, and unfortunately, Glenn is not going to be able to make it for the midday market update here today. However, we do have this talk from Glenn from the two-day event we just recently held. So without further ado, we hope you enjoy it, and let's get right into it here today.
Good morning, everyone, and welcome to our Tampa two-day seminar here being streamed from our Cornelius, North Carolina Training Center. My name is Glenn Tompkins, Senior Instructor here at VectorVest, and it's my pleasure to kick off the next 2 days of what I think is going to be some of the most powerful information that you're going to get from the standpoint of investing in the stock market. Now, a lot of people claim that, but we're going to go through the process to show you why the VectorVest system is so amazing in helping you to make the right decisions in the stock market on a daily basis. And as Don Payton, the president of the VectorVest, said that during the outage, we felt the pain of not having the VectorVest software. And I think a lot of you did as well. So for those of you who are not subscribers to the VectorVest software, the next couple of days, we're going to plant the seeds of why you need to be a VectorVest subscriber, and why the tools that we have within the system are designed to help you to make high probability trades to help you to make money consistently. Another thing that I saw when we started the chat, there's people tuning in from all over the world, and that is an amazing testament to the power of just word of mouth, telling people about the software and everything that we do to get it out to the world. So thank you for the people tuning in from everywhere. And again, because it's live stream, you get the opportunity to watch it from the comfort of your own home. Now, as we get into the first talk, and my slides changed a little bit. As we get into the first talk really gets into the VectorVest system of analyzing stocks. And the word system in and of itself should put a big a bow tie around what we're going to talk about for the next couple of days. It is a tried-true system, and the first talk is going to set the basis. And for any strong building, you need a good foundation. This first talk is really going to start to build the foundation of what we are and why we are who we are. And why, again, as if you're not a subscriber to the software, you really need to consider doing so. Tool. As any good craftsman, you need tools in your tool belt. The VectorVest system is a great tool to add to your tool belt. Now, everybody invests in the market differently, and VectorVest can accommodate every type of investor. We're not a one-trick pony. We can help everybody, whether it's for the short term, it's the swing trades, whether it's buy and hold, whether it's options. All of those things can be found within the VectorVest system, and we're going to touch on all of those different things over the next couple of days. And the more tools you have in the tool belt, the more or better equipped you are to be able to handle any situation, any market. And and again, from a fundamental standpoint, one of the things that we do that nobody else does is we time the market. For those of you out there who may be new, when we say time the market, it's not about predicting or prognosticating where the market is going to go. We are trend followers, we follow the trend, and we keep our subscribers on the right side of the trend at all times. Now, the market can do all kinds of things. We don't predict and say it's going to do this, do it. We stay with what the trend gives us. And sometimes the trend is non-trendy, and we're okay to tell you to sit on your hands. We'll tell you what stocks to buy, and guess what? Sometimes it's not a right time to buy. We're not afraid to tell you that as well. So it's not just about here, take this stock, go buy it, go handle it. We will walk you through what you need to do. So with all of that being said, we hope to show you over the next couple of days just how good the software is. Do we have to tout it? No. And as you learn more about what we have to show, the software will actually sell itself. and you guys have an opportunity to take advantage of what we have to offer. All right, so the first talk starts off with the VectorVest system of analyzing stocks. We analyze stocks better than anyone out there. No one analyzes stocks the way we do. That may be a bold statement, but it's true. No one goes through the meticulous things that we go through to truly give you a good analysis of a stock. Not that, well, it's good right now, go buy it. Or it may not be so good right now, hold. No, it goes way more beyond that. And Dr. Bart DeLito, the founder of VectorVest, went through and put together the analytics, put together the formulas to help you to make the right decisions, because that's what he wanted to do. He wasn't making money in the market, and he wanted a better way to do so. He found that way, founded VectorVest, and relayed that information out to his subscribers or our subscribers over the last almost 30 years. So this is what this is all about. We're going to get into the first slide. VectorVest believes, and this is so important when looking at analyzing stocks or giving people guidance on what to do in the stock market. We believe that every investor should know three things. All right? Bare bones, you should know these three things: what a stock is worth, how safe it is, and when to buy, sell, or hold. If you take just those three things and apply it to every stock that you invest in, guess what, folks? You're going to make better decisions. A lot of times somebody will say, hey, go buy this stock because this industry is rocking and rolling. But as quickly as that industry can rock and roll today, it may rock today and roll tomorrow. And this is why you need to analyze that stock beyond just the words that the person or the company or the newsletter said. So knowing what a stock is worth, how safe is it? How risky is it before you jump on board with that investment? And when to buy, sell, or hold. Just because a stock is a stock that you think is the right stock to buy now, anything can happen and that stock price can go against you. I know that that's happened to many of you countless amounts of time. I think this stock should go up. The news looks great on the stock. But just because it doesn't always mean it's the right time to buy it. Or if the stock goes down, it may not be the right time to sell it, especially if the fundamentals behind the stock are good. This information you can't get anywhere. You'll hear that time and time over the next couple of days, because no one does what we do, how we do. Now, when we talk about what a stock is worth, value is computed, and that's how we know what a stock is worth. Every stock in our database gets a value every single day. It is an intrinsic value of what we feel the stock is worth. And it's computed by VectorVest. Again, nobody else does it. And it tells you what a stock is currently worth based on a few different things. Earnings. Why? Because earnings is the engine that drives a stock's price higher. How about earnings growth? How about profitability? Over the time of the stock's existence, how profitable is it? And things that people don't take into effect other places when analyzing a stock is looking at the current inflation and interest rates, because that amongst our earnings moves markets globally. Earnings, interest, and inflations moves markets globally, but we take that inflation and interest rates into effect when giving a value to a stock. So when you look at the value of a stock, we've gone through a lot of work. It wasn't willy-nilly. It wasn't just that we think we like the stock, so we're just going to give it a value of X. There's a lot of things that go into what constitutes a value or an intrinsic value on a stock. Now, when you're still looking at what your stocks are worth, if your stocks are less than the value, the stock is undervalued. It makes it very easy to understand if the stock that you're looking at is trading above or below its value. The value is on that page or on that analysis when you look at the stock. Quickly you can discern that instead of having to look at something like a PE ratio. When you look at PE ratios, though, they're very subjective, because I can give a PE ratio on a stock. Some of you may think it's undervalued. Some of you may think it's overvalued. But when there is a printed intrinsic value on a stock, you can clearly see if the stock is trading above or below that. When a price is more than its value, you're paying a premium. So our mantra is to have you in safe, undervalued stocks that are rising in price in a rising market. You'll hear that more than once over the next 2 days as well. But because a stock is overvalued, even though our mantra is we want you in undervalued stocks, just because a stock is overvalued doesn't make it a bad stock. It just means that you're paying a premium or more than what the stock is worth. And if you don't want to be in an overvalued stock, guess what, folks? You don't have to. We track over 9,000 stocks, and you can find the stocks that are tailor-made to fit you. Remember when I said that we can accommodate any type of investor? That's absolutely true. No matter how you invest in the market, out of 9,000 stocks and this explicit analysis, you can find the right stock for you. Now, still looking at what a stock is worth, we've got 2 stocks that we're going to use over in this first talk to give you some kind of a practical application on what you're looking at when you're looking at these indicators. So here's a stock, Builders First Source. BLDR carries a price of $71.11 with a value of $94.14. Quickly, I can see that the stock is trading under its value, so the stock is undervalued. A stock on the other side of the spectrum, Peloton Interactive, PTON, carries a price of $43.55 with a value of $6.97. Now, let's say you get a newsletter, you get an email that says Peloton is on the move. You get enough people reading that and feeling that and driving the stock's price higher, but without this kind of analysis, you could be making a mistake. Now, don't get me wrong. There's a lot of people who will speculate, and they make money speculating. That's on you. But from a fundamental standpoint, what every investor should know, you need to know this information before you dive into following the crowd that email or that person is talking about. This is where the world-class analysis comes into place. So Peloton's trading at 43 with a value of $6.97. The stock is way overvalued. The cool thing about price and value is that over a 1 to 3 year time period, price and value should meet, somewhere in that time period. And if a stock is undervalued, we think that a stock, or most likely we've seen over the years, that a stock's price will rise to meet that value. In the case of an overvalued stock, most times the stock's price will fall to meet that value. That, folks, is the analysis that you get with the VectorVest software. You should favor buying undervalued stocks because, again, the mantra is for you, from a fundamental standpoint, folks, there's so many different ways to invest in the market. But from a fundamental standpoint, that you can have the building blocks to build a great trading platform is to be in safe, undervalued stocks that are rising in the market, rising in price in a rising market. Now, these prices were taken, as you can see on the slide, from December 3rd of 2021. These prices have changed. But now that you've got an understanding of how to use value from practical application, you can run and look at any stock anytime you want now and see where that stock's price is compared to its value, and that's why it's so important. Now, that's from a value perspective. What about the stock's upside potential? Its ability to make money over the next 1 to 3 years as well. Relative value looks at the future. It compares price and value, takes the stock's risks and earnings growth into account, and indicates the investment's potential of a stock compared to a AAA corporate bond. So what we do is we have this indicator, relative value. The next 4 indicators that I will talk about are all cast on a VectorVest scaling between 0 and 2. We make it very easy for you. If the indicator is above the value of 1, it's favorable, and if it's below the value of 1, it's unfavorable. So not only can you put and look at price and value just like that, the indicators that we use within the VectorVest system are easily discernible as to whether they're good or favorable or not unfavorable. All right? So relative value looks at a stock's upside potential as compared to a AAA corporate bond. What happens with a bond? You buy the bond After it matures, you get all of your money back with a small interest. So it's a relatively safe investment. It's not a gangbuster trade, but it's a relatively safe investment. So what we're looking at is the stock's ability to outperform that safe investment over the next 1 to 3 years. The higher above 1 it is, the higher the probability over the next 1 to 3 years, the higher the probability that that stock should outperform the AAA corporate bond. If you want to stay right on line with what the AAA corporate bond does from a safe perspective, you can do that. But you can now go the extra mile to find a stock that should consistently outperform that AAA corporate bond over and over and over. Favor buying stocks whose RV is more than 1. All right, so now we've looked at value. Now we've looked at relative value. The next indicator, before I go to the next indicator, let's take that relative value and put it into practical application. Builders first. Remember, these two stocks are the same stocks that I'm going to use over and over for each indicator. It has a relative value of 1.76. Peloton has a relative value of 0.21. On that scaling, that AAA corporate bond should grossly outperform Peloton over the next 1 to 3 years. So that news that came out about, hey, Peloton is getting ready to rock and roll. Wait a minute. I'm looking at the relative value and showing that the upside potential is not there. So if I do take this stock because I think that whatever's going on is going on, with the VectorVest analysis, I can now determine that this should be a shorter term trade because the upside potential is not there based on that relative value indicator. Folks, we're already starting to go to work for you on the basis of the analysis that we give with our indicators. Builder has a far better upside potential over the long term. When I say long term, again, I'm looking at 1 to 3 years. These are stocks that you can feel comfortable with owning with good upside potential. Now, next indicator. So we've looked at value, we've looked at relative value. Now let's look at an indicator of risk. It is relative safety. It's computed from the analysis, and get this, folks, of the consistency and predictability of a company's financial performance. We get all the time, why do you guys don't have price to book and a whole bunch of other things dealing with the financials of a company? How about we take all of that stuff and wrap it up into one indicator? So say to yourself, what's easier, to go look at debt to equity, sales volume, business longevity, all of those things individually, or have it encompassed in one symbol or one indicator called relative safety? We take into account all of the things from a financial basis on that stock, such as, again, the debt to equity, the price to, all of those things that you guys always ask for. Relative safety will handle that. And price volatility and other factors. Now, some of the things that you see here are the things that we can tell you about. But these indicators are proprietary, so we don't give you all of this secret sauce. But understand this, it works. So if I'm looking at a stock's ability to outperform or meet or exceed its earnings expectations, how about I look at a stock that's got a high relative safety? Now, when does that come into place? A lot of times we hear, hey, Glenn, AMD is going to have earnings tomorrow. What do you think? The first thing I always point you to is to look at relative safety. If the relative safety is nice and high, the probability is really high that the stock should meet or exceed earnings. Now, the other side of that is forward guidance. We don't have an indicator on forward guidance. Don't think anybody has an indicator on forward guidance, but I'm going to tell you that it's going to always have a high probability of meeting or exceeding its earnings expectations when relative safety is nicely above 1. Favor buying stocks whose relative safety is more than 1. Remember, we make it very simple on the scaling between 0 and 2, where above 1 is favorable and below 1 is unfavorable. Let's go look at practical application. Builders has a relative safety of 1.43. Peloton has a relative safety of 0.62. What's the guiding factor here in regards to Peloton? 1, it's overvalued. Upside potential relative value is below 1. Relative safety below 1. So that article that comes out, again, folks, you're taking into effect the analysis that VectorVest can provide for you rather than just what someone is telling you to go and do. Remember, you put out an email to enough people, enough people are going to just jump on board and go, yeah, that's the right thing to do. But with the analysis that we have here within the VectorVest software, you can make a better informed decision. All right? An investment in Builder carries far less risk than a similar investment in Peloton. I need to know, and that whole RS, how risky the stock is, will put you in line with finding stocks that have a higher potential, not only to go higher, but if they're less risky, they should be less dippy, for the lack of a better word, going up and down, up and down. They tend to have more steady moves upward at like a 45-degree angle. If those are the kinds of stocks that you're looking for, then using that indicator relative safety is going to be crucial in being able to do that. All right, so now, knowing if a stock is under or overvalued, whether the stock has got good upside potential, whether the stock is safe, what else do you need to know? Is my stock going up or down in price right now? Relative timing is computed from the analysis of direction, magnitude, and dynamics. Those three words are crucial in determining whether a stock is really going up or going down right now. On that scaling between 0 and 2, any stock that's got a relative timing above the value of 1 is considered to be in an uptrend. Now, how about this? How about you're in a stock, the stock was going up nicely. All of a sudden, the stock's price still starts to sputter a little bit going up, but relative timing starts to move. Folks, that's a great heads-up indicator to be protective on that stock. How many times have you seen a stock just fall off the face of the earth and wonder, wow, what happened? A lot of times when you look at a stock's price in the VectorVest system that's going up, many times that relative timing will be a precursor to something is getting ready to happen with that stock, because we're looking at the direction, whether it's up or down, the magnitude, the dynamics behind it. The magnitude, how high above that value of 1 or below that value of 1 will determine how fast in an uptrend or how fast in a downtrend that stock is. You can use that from the perspective of seeing if a stock is ready to be bottom fished. When RT is so low and so beaten up, when the market turns around, how about looking for stocks that have very low RTs? And that's what the epitome of bottom fishing is all about. In the VectorVest system, we find great stocks that have RTs so low that they've been beaten up, but when the market moves around, these stocks start to move. That's why, and we get this question asked a lot, why, when it's bottom fishing, do you buy sell recommended stocks? Because the RTs on those stocks have been beaten up. But I bet you if you look at the relative values or the values on those stocks, they're pretty good. And that's the epitome of bottom fishing. But that indicator RT plays a pivotal role in that to find the stocks that have been really beaten up. Folks, favor buying stocks whose RT is more than 1 and rising. If a trend dissipates, RT will gravitate towards 1. That is so pivotal in being able to track the momentum of a stock. If that RT starts to fall, you now know that something is up with that stock, but it comes from the VectorVest analysis, right? All right, now, practical application. Builders has an RT ranking of 1.52. Remember, folks, the higher above 1 it is, the faster in an uptrend that stock is. The more below 1 it is, the lower or the faster in a downtrend that stock is. Builders is rising in price. Well, actually, Peloton is a RT ranking of 0.14. That stock is big time in a downtrend. You guys ever think sometimes that these articles come out from people or people start talking about the potential behind it because the news fell on a stock just to push the stock's price higher? I know that that's out there. Think about that. But with this kind of analysis, again, you can make a better informed decision. Now, as I go through all of these things, there's a lot of subscribers that are already out there saying, this stuff is basic. We know this stuff. But a lot of people out there today are not subscribers to the VectorVest software, and you're getting a glimpse as to the power of the VectorVest software in helping you make better decisions. By the end of these 2 days, hopefully you will have had enough evidence to make a decision to decide to become part of the VectorVest family and the tools that we have to offer to you. I want to plant that seed now because it's something you should definitely consider, especially so far if you've liked what you've seen. And by the way, in regards to that, if you like what you see so far, don't forget to hit the like button. If you're not a subscriber to our VectorVest YouTube channel, please subscribe to the channel. But I don't want to defer what this is all about. This is our flagship seminar. This is something that we do every year, and the basis behind this is all about what VectorVest can do for you and change your investing and take your investing from where you are now to the next level. So that's the premise of what we're doing for the next 2 years. Wow. Can you imagine if we did this for 2 years? No, but it's for the next 2 days, all right? And keeping in mind that the pricing that you see here had been taken as of December 3rd of 2021. Because as people come into the room, you're gonna be like, those are not the prices. I did mention that earlier, but as new people come into the room, I just wanna touch on that, that all of the prices that we're looking at in this presentation were based on December 3rd of 2021. Now, let's take all of that together. Now, when we look at relative value and relative safety and value, that's the fundamental analysis behind the stock. I go back to RT for a second because that's the technical analysis that we have on the stock. When I said earlier, we put a big bow around the analysis. When we analyze stocks, we use fundamental analysis with the insight of technical analysis to give you a well-rounded view or analysis on a stock. So folks, we do our work. I always like to say that we work hard so that you don't have to, but it's true. As soon as you get into the VectorVest system, you automatically start letting the software do a lot of the heavy lifting for you, and all you have to do now is start to learn it, understand it, and reap the rewards. That's what it's all about. Now, take all of those indicators, the value, relative safety, relative timing, especially those 3 indicators. Do you own stocks with a good combination of value, safety, and timing? Again, from a fundamental standpoint, folks, that's what you're looking for. There's a lot of different ways to buy stocks. You can bottom fish, you can use technical analysis, you can use all kinds of things to buy stocks or have a decision to buy stocks. But this right here is where the rubber meets the road. Understanding those indicators, how powerful they are, combine them to find the best stocks for you. Value, safety, and timing is computed from the square root of the weighted sum of the squares. I've heard that for 17 years. And all I need to know is that it works. You don't have to be a mathematician, but for those of you who need that information, that's what it is. This square root of the weighted sum of the squares of relative value, relative safety, and relative timing. Stocks with the highest VST ratings have the best combinations of value, safety, and timing. So when I look at a list of stocks and I say that this list is sorted by VST, I get the question, so you're saying that that's the best stock in your database? No. What I'm saying is that that is the best stock at the top of the list that has the best combination of value, safety, and timing. Well, isn't that the same thing as the best stock in? No. There is no really best stock in the universe. Everybody invests differently. So what I think is good for me may not be as good for you, but the VectorVest system can accommodate and find the stocks that are the best for you. So I want to put that out there because especially if you're brand new and you don't know much about the VectorVest software, maybe you're thinking that I'm selling you a pipe dream that, oh, that's the best stock in the database. Well, that's the best stock that has the best combination of value, safety, and timing. And now that you understand what those indicators are, you can put it into a better perspective of just how good that stock is. Does it make it the best? Am I saying that is the best? It's the best by value, safety, and timing. Favor buying stocks whose VST is more than 1 because it is also cast on that VectorVest scaling between 0 and 2. All of those indicators are cast on that scaling, and it makes it very easy for you to discern whether that indicator is good, bad, or indifferent. How many times have you seen an indicator that gives you a value of some sort, and you got to really determine whether or not that's really good for you or not? With the VectorVest system, that analysis, again, Time is money. Time is a commodity. When you're investing in the market, what is your time worth? VectorVest feels your time is worth a lot. So we're going to try to minimize how much time you have to use to make decisions. And if that's not worth it to you, then that's up to you. But that's a very important factor in trying to make decisions on stocks. Just think about that, all right? Now, Builders has a VST rating of 1.57. That's really good. And that's probably one of the best stocks in the software by VST. Now you can understand why those indicators are as good as they are, and this is possibly a stock that you would want to put your money into. It's got a stock that's nicely undervalued. It's a safe stock. The stock consistently meets or exceeds its earnings expectations. It's going up in price because RT is above 1. And it's got a good combination of all three. That's how you make a good decision on any stock. Now, let me take these indicators and present it to you a little differently. Whether the stock is a $100 stock or a $2 stock, I can use this same analysis no matter where it falls in the price spectrum. That VST doesn't accommodate itself to just the expensive stocks and weed out the low dollar stocks. You can find low dollar stocks that've got great combination of VST. For those people who don't have a lot of money in the market yet, that VST can put your low dollar portfolio into a different bracket by looking at VST. Think about that as well. All right, so not everybody's got the same amount of money in the market, and a lot of people are new to the market and they want the ability to grow their portfolios and maybe looking at lower dollar stocks. VST will help you to find those lower dollar stocks that have a great combination of value, safety, and timing. Something to think about. Builder has a much better combination of value, safety, and timing, thus making it a pretty good stock. Now, when you're looking at all of these stocks to get into, you've got to know when to get out of a stock. And VectorVest has what we call a line in the sand. It is the stop price. Now, the stop price is computed off a 13-week moving average of the closing prices. I'm going to stop there because a lot of people think that, well, I could just put a 13-week moving average on a stock and get the VectorVest stop. No, wait, there's more. And it's fine-tuned according to the stock's fundamentals. The relative value and relative safety. Remember, I told you when we analyze stocks, we use a combination of fundamental analysis along with technical analysis. Those two indicators form or are part of that stop price. The fundamentals. Now, if a stock has got good fundamentals where the relative value and relative safety are still good, we're going to lower that stop price to keep you in that stock longer. We're going to give that stock a little bit more room to the downside because the fundamentals are good. But if the fundamentals in the stock are not so good, we're going to raise that stop price and not give that stock a lot of room to the downside to get you out. And this is very important. I learned this from Steve Chappell a long time ago. Our stop price can be treated as gospel or guide. You can stick to it and say, that's my line in the sand. When the stock's price goes below that stop price, boom, I'm out of it. Or it can be a guide. It can fall below that stop price and you can have your own reasons why you still want to remain in that stock and you're using it as a guide, but don't forget. One thing needs to happen for a stock to get a sell recommendation in the VectorVest software. The stock's price has to fall below the stop price. We're going to talk about that in a second. But that's the only thing that needs to happen. And when you see a stock in the VectorVest software, whether it's a $100 stock or a $1 stock, it's something that you've got to pay attention to. And a lot of people won't tell you that. And a lot of people will tell you, no, you can hold the stock forever. It'll go back up. It'll recover. Many times it will. But when I'm investing in the stock market, I'd rather be in stocks that are making money than waiting for the stocks that are losing me money to recover. Remember, time is a commodity. How much time are you willing to give to that stock falling below that stop price to recover? Sometimes it could be months, could be years. Do you really want to do that? Or would you rather use the guidance that we're giving you with these indicators to make a better decision to cut your loser quick and put it into something that's moving? Also, something to consider. All right? So it can be used as a guide or gospel depending on how strict you want to be with it. Practical application. Builders. Price $71.11 with a stop price of $61.66. Remember this, the fundamentals on the stock were good. Notice where the stop price is. It's giving that stock about $10 move to get you out of the stock. Wow, do I want to take a $10 move? Well, wait a minute. Relative value tells me that the stock's got good upside potential over the next 1 to 3 years as compared to a AAA corporate bond. Relative safety tells me that that stock consistently meets or exceeds its earnings expectations. So yeah, I can feel comfortable through the VectorVest analysis that this stock most likely won't hit that stop price, that it'll pull back. And the cool thing about that is you don't have to sweat. You can let the system, you put the trust in the system. As a system, you put your trust in it, and 9 times out of 10, you will watch that stock get close to the stop and then bounce back up. And you'll sit back and go, wow, the VectorVest system kept me from prematurely getting out of a stock. I've seen that happen more than once. And you'll listen to a lot of the people that are in the room that are subscribers to the VectorVest software. Listen to them. You're going to hear us for the next 2 days. But I want you to pay attention to many of the subscribers in the room who can attest to what we are talking about and will be talking about over the next 2 days. All right? Builder has a much better combination. Oh, hold on. Peloton has a price of 43 and a stop of 61. Notice where that stock's price is. Well, notice what the stock's makeup was from the analysis. It was overvalued. It had upside potential below 1, had safety below 1. It was in a downtrend. The stock's price falls below that price. Stock gets a sell. Well, it warranted that sell. And you could still be holding it because you've got some idea that somebody said something, blah, 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 blah. The analysis doesn't lie. It's there to make you a better investor. How you use it is up to you. But this analysis has been around for 30 plus years. We've got to be doing something right to still be around this long. Something to consider. All right, the bottom line, all factors are considered in making a buy, sell, or hold recommendation on a stock. So when I look at what is a buy, we're going to come back to what a buy is in a second. The first thing I want to start off with is the easy one. How a stock gets a sell recommendation. Simply put, when the stock's price goes below the stop price, the stock gets a sell. That's it. And any stock, whether it's Apple, whether it's Google, whether it's Ford, whether it's Lucid, whatever is out there, when a stock gets a sell recommendation, you need to pay heed to that. You need to listen to that. Because all of those things are taken into consideration to give it that sell recommendation. And if you hold it beyond that, that could be your own peril. The analysis is there to give you the information that you need to make the right decision. I use that word information because all of the analysis that you see here is useful information. What you get from a lot of other people is just data. It's just news. And a lot of stocks are news driven. And even if they are news driven, always put your stocks into a watch list in the VectorVest software to get this kind of analysis. When I made mention that we're here to help to take your investing to the next level and beyond, it's not just lip service. Look at the indicators. Study the indicators. Do your own analysis based upon what you're already doing and compare it to the VectorVest way or the system of analyzing stocks. It will make a move in your portfolio. Something to consider. Next one, A stock gets a hold when the price is greater than the stop price, but any of the other three factors needed to receive a buy are not met. That's the second easiest one. The next one, it takes a lot of work for a stock to get a buy recommendation. Here's the things. The price has got to be higher than the stop. I'll go to 4 because the price needs to be diverging away from the stop. Our indicators, VST and RT, need to be above 1. Think about that. The overall combination of the stocks, VST has to be above 1. Stock's got to be a good stock in order to be a buy. RT, which tells me if a stock is in an uptrend or not, needs to be above 1. Notice that relative safety is not up there? Because what I'm looking for to tell you if a stock is a buy, hold, or sell, I need to make sure that the stock is going up. There's no way that I'm going to give you a buy recommendation for the most part in the stock that's going down. All 4 of these things need to be in play in order to get a buy recommendation. So there's a lot. It takes a lot of work for a stock to be a buy. A good way to find stocks early in the game is if the stock just became a buy. Folks, when I said and mentioned that there's a lot of different ways to make money in the market, VectorVest has got a lot of flexibility to help you make money in the market as well. Again, when I say you can find whatever stocks you want to fit you, I'm not just whistling Dixie, folks. It's not just lip service. These indicators and understanding how they work gives more perspective on why they are so important and why they work the way that they do. So let's look at builders. It's been rated a buy since 8/3 of 2021. Remember, this is back in December, so for 4 months, it's been rated a buy. Stocks that tend to be in that buy category will remain that way until something major happens, primarily with the market or something like that. You can feel comfortable in buying a stock that's got a buy recommendation. Now, I get this a lot. It's been a buy for the longest time. Do I still buy it now? Look at the other indicators. Look at the graphs. That's going to help you to make the right decision. Is the stock still doing what you want to do? Is it still going up? Absolutely. Then you run with it. As long as the stock is going up in price and doing what you want it to do, you can feel comfortable. Look at the relative value. Look at the relative safety. Look at those things to help you determine whether or not, I can't see nothing on that. Okay, on those stocks. All right. Stock Viewer is your entrance into the VectorVest. It's an enormous spreadsheet of all of the VectorVest indicators. Here is a great essay, thank you, that was written by our founder, Dr. Bartolito, back on 11/10 of 2006. I got to take off my glasses because I can't see that too tough. Let's go to the Views tab real quick. Yeah. Oh, can you bring that over, Clay? There you go. Let's go to the Views tab. Let's go to 11/10. We'll do this real quick. Thank you. Of 2006. $11, $10. And we're going to do this real quick. I spent a lot of time on these indicators because I think that from a fundamental standpoint, they are so important to set the table for what we're going to talk about for the next couple of days. How I use the Stock Viewer. Now I can put my glasses back on. It's not all the way over there. How I use the Stock Viewer. And Dr. DeLito said the Stock Viewer is a gold mine. Our job is to find the gold contained within and extract it. He looked at the top 20 VST stocks every night, and he described what he looked for. Nice steady graph patterns, rising prices. I also like to see smooth, steady, rising earnings per share patterns. Stocks with the earnings per share patterns have high RS ratings. Remember we talked about that? Stocks that are not, because they're less risky, they're not as bouncy. To find the smoothest price patterns, I'll sort by CI as well. CI is a comfort index, also captured on that scaling between 0 and 2, where above 1 is favorable. CI looks at a stock's ability to withstand long and lengthy price declines. Stocks that are resilient. Price growth persistence is another way of looking at price growth persistence, consistently going higher. All right, and then he also uses dollar change. So tell you what I'm going to do. That's the essay. Again, it's from 11/10 of 2006. Write it down if you haven't already. It was Dr. DeLito's essay specifically on how to use the stock viewer. I'm going to take this all the way back to now. Remember, let's just do it this way. 2022, January, today. Practical application. Let's go to the stock viewer. Let's go right there in stock viewer. As I open up the stock viewer, the stocks are automatically sorted by our master indicator VST. Look at that. So 12/3 is when we did all of these tests or all of these analysis. Look at it still. So when I hear a person say, well, it's a buy recommendation, has gone up, can I still buy it? Notice that the stock, we'll look at the top 20. Notice that the stock is still the top stock by VST, followed by MU. A lot of these stocks that you already know about that we talk about over and over again. You want your own newsletter to help you to find the stocks to get into? You got it right here in the stock viewer. You got it right here in the stock viewer. Look at these relative values, relative safeties. Let's do this. Let's sort by relative value. Let's find the stocks in the database that have the best upside potential. Some of these are sell recommended stocks. Well, that's because they've been beaten up. Stocks that have great upside potential. Remember I told you that a lot of times from a bottom fishing perspective, that a lot of the stocks that are really good upside may not be the right time to buy? That's fine. At least keep them on your radar. All about vaccines, mRNA, BNTX, MARA4, cryptocurrencies, a lot of stocks, again, that you've known about, but a lot of them are sell recommended. They are starting to get beaten up a little bit. Look at the relative safeties, they're still there. It's going to be, there it is. Look at the relative timings. These stocks have been beaten up, so they're not in uptrends. But if you look at from fundamental standpoint, Click, fundamentally sound. BioNTech, fundamentally sound. mRNA, fundamentally sound. And you'll go through this list sorted by relative value. Many of these stocks are fundamentally sound, but that indicator, RT, tells me they may not be the right time to buy the stocks. Let's look at the stocks by relative safety. These are the stocks that consistently meet or exceed their earnings expectations. Look at this. At the top of the list is DHI, building. Relative safety, way up there. Couple of sell recommended stocks, again, relative timing will tell me when it's the right time to get into a stock from the perspective of if it's in an uptrend or not. And of course, VST. I'm going to do one last sort, CI, the stocks that have the ability to withstand long and lengthy price declines. And before I turn it over, let's go look at the top few. This is the only one I'm going to look at the graphs on. Only one I'm going to look at the graphs on. Look at that equity curve. Look at that equity curve. This is a one-year graph. This is CI. Bottom left, top right. Not a lot of pullback, but look at that stock run. There's RT at the bottom. Next one, MCB. Folks, that's just a CI sort on the stock viewer to find these stocks. Look at that. Folks, that's not a newsletter telling me it's okay to go buy the stock. That's just looking at an indicator. One last thing. Let's go look at relative safety real quick. Top few. View the stock graph. All right. A little bit more choppy, but still bottom left, top right, pulling back right now. The graph tells me it may not be the right time to buy it, but I know that the stock consistently meets or exceeds earnings expectation. Google, bottom left, top right, a little bit of a sideways move right now. WST pulling back, but overall, look at that. All right, and as I look at this, let's do one other thing in regards to a graphing capability when you open up a graph. Let's go back to VST, all right, by our master indicator, sorting by our master indicator, and especially for the purposes of the people who still are brand new to the software. All right, let's graph the top 10. Oh, okay, I was wondering why you would, all right. Okay, we'll go back to Builder. That kind of, hold on. Let me get my thoughts back together because bottom left, top right on Builder. Let's go back to the graph layouts. This is the VectorVest simple layout, all right? In the VectorVest simple layout, it's going to look at a couple of things. I'm going to look at that stop price. Stock's price falls below the stop price. Remember, you use it as a gospel or a guide. The stock's price falls below the stop price. The stock gets to be a sell recommendation. Over the last year, though, we do have a bottom left, top right, and look at where that stock's stop price is. Gets close, pulls up, gets close, pulls up, gets close, pulls up. And finally, when it does go below, how much profit were you able to take and capture without getting out prematurely? All right, stock's price gets back up into the buy recommendation, and look at that. It's been a buy now since 8-4. Look at that. Now, what else is on this simple graph? Relative timing. That's that indicator that tells you that the stock's in an uptrend. RT goes above 1, stock's in an uptrend. Earnings, which is the engine that drives the stock's price higher. Earnings per share rising, stair-step effect. Fundamentally, from a foundational standpoint, you add the indicators, and we can still see the indicators on the side. I won't put those on because the VectorVest simple graph doesn't have them. But I can add those indicators like relative value and relative safety and look at those in conjunction with what's happening with the stocks. That's important. All right, I like that the stock got a buy recommendation, and again, well, is it too high to buy now? Is it doing what you wanted to do? Is it above that stop, pulling away from the stop, gapped up, still pulling away? And right now, because the fundamentals on the stock are still so good, the stop price is further away from the stock's price. We're giving that fundamentally sound stock more room to move because it's fundamentally sound. And it shows that it's worked time and time again, bouncing off, not going below, bouncing off, not going below, bouncing off. And finally, when it did, that was a good profit to be taken. Let's go to the next stock. Now, MU. Now, even though it's got a high VST, if I look at the graph and I'm like, holy smokes, I don't like that graph, then you don't have to take it. But something that I want you to keep in mind in regards to this stock. Look at that look at that earnings per share. Even through the toilsome times here, I'm telling you that the stock has the ability to consistently make money. Our earnings per share is forecasted out a year. All right, we forecast where earnings should be a year from now. And what we were saying is a year from 8-4, earnings should have been here. And look at where it was. It's not up to 8-4-2022 yet, but it's surpassing where it was anticipated to be by this time next year, and we still got more time to go. That earnings per share, the stock's price took off, rising earnings. What could I have used to get in? Look at that RT. Relative timing above 1, stocks in an uptrend, boom. All of this time when it was toilsome, very little time did it spend above the value of 1. All right, but when it did, look at it take off. It's staying above, fundamentally sound, staying above that, that stop price. Wow, ACLS. Folks, this is not me looking out to anybody for stock guidance. I'm showing it to you in the VectorVest system. Bottom left, top right. Stock got a most recent buy recommendation, 8-6, been that way. And guess what? What's been going on in the market over and over again? You know, up and down and volatility. Good quality stocks sorted by VST have the ability to just do its own thing, which is make money. And if that's important to you, then again, the tool is something that, or the system is something that you need to consider. Loving that over and over, time and time again. Look at the stair-step effect on earnings per share. I look at the stair-step on earnings per share. Stock is nicely above the stop price. All right. BXC, a little bit more volatility. And you know something? I can look at a graph and determine, well, you know, I don't want to have to sit through this. Then I go to the next stock. But again, I want to turn your attention to how powerful that earnings per share is being forecasted. Look at this stair-step effect. Earnings is the engine that drives the stock's price higher. And many times, if I go back to the other graph, not that one, earnings is the engine that drives a stock's price higher, even through this. And you don't have to sit through this. That's fine. You don't have to sit through this. But I'm going to keep a stock on my radar whose earnings per share looks like this, and then hopefully take advantage of that. Let's go down. AOSL, a stock that's we've been talking about in the software a lot. Earnings per share, pulling back right now, but look how far away it is from the stock price. Fundamentally still sound. So when I say that the stock price could be used as gospel or guide, or I can say that RT is a precursor to what's going on, it's leveling out. I'm not afraid to stay in that stock and give that stock a little bit more room. It's fundamentally sound. All right, let's go to the next stock. Click, a little bit of a sideways move as of right now, but there's that engine. I know I'll keep this on my radar, especially if I see earnings is rising. I'm going back and forth between buy, holds, and sells. It is what it is, but I'm going to keep my eyes on the earnings per share, and if I don't like the graph, I don't have to take the stock. Holy smokes. This is ON Semiconductor, rock and roll. All of these stocks have a lot of the same things in general. Look at the rising earnings per share. Look at the rising earnings per share. All right, so from that perspective, and looking at the stock viewer, and looking at all of the different indicators that we have, the power behind these indicators are what makes us different than anybody else out there from an analysis standpoint. This stock viewer gives you a lot of power that you may not have with a lot of other services. And that's what the important thing is. I can stream this now, and I can use this as of real-time information right now. What stocks are the best? Talking about earnings per share, let's talk about earnings growth. Let's look at a stock's ability to grow its earnings. If I know that the stock's earnings per share is the engine that drives the stock's price higher, let's look at the earnings growth. Wow, but look at some of these stocks that sell recommendations. Be careful with that. But these stocks, remember I told you fundamentally these stocks, a lot of stocks are fundamentally sound. Again, stocks to keep on my radar. Stocks to keep on my radar. I ain't got to buy them if they're sell recommendations, and a lot of times I'm not going to tell you to do that, especially if they're sell recommendations. All right, let's go back to VST. And that's where we stand. That's where we stand at this particular point in time in the indicators and what we need to do, and why the power of the software is what it is. Can you bring up the slides again? Say again? Oh, yeah. All right. So off of that, let's go see. We got a break coming up. Oh, I'm a little early. I got thrown off, and I apologize for that. So that was the first talk in regards to the system of the software, the foundation of the software, and why the indicators that we have within the VectorVest software are what they are. And again, it'll take you to a different level of investing in the stock market. It was my pleasure to bring you the first talk. A lot of the indicators that we talked about in here, we'll talk about all throughout the session. As a matter of fact, we have a talk that's going to talk to you specifically about how to utilize relative safety to find some of the best stocks to get into. So with that, folks, again, thank you for having me for the first talk. I'm going to throw it over to Ray.
Thank you, Glenn. What a great presentation to start off the Tampa two-day. In this case, we're in Cornelius, North Carolina, but the two-day investment seminar, what Glenn just talked about really lays the foundation for the entire system. For everything we're going to do over the next couple of days is going to refer back to these indicators. And when VectorVest was created, Dr. Bart DeLito, he wanted some specific answers to some of the challenges and problems he was having in investing. And with these indicators, you get those answers. You get actionable information. It's not just data. So that information, RV is telling you the upside potential in the stock. RS is telling you how safe it is. RT is telling you the direction. Is it in an upward trend and is it in a downward trend? And you can even combine all of those into VST and just have a great understanding of the overall characteristics of the stock. And at VectorVest, we're combining those fundamental and technical information, putting them together to give you the best advantage. So I think this is a great talk, especially for those of you who are new to the system or new to investing. You're going to notice that we're going to reference a lot of these things as we go over in the next couple of days. So for those of you who just joined us, we've been watching the head count for today's event increase, and more people are coming. There's just a couple of things I want to touch base with here before we take a quick break. One of those is the recordings. I've seen a lot of chats come in. How does the recordings work? Well, we are going to leave this up on YouTube for a couple of days, just so that the Australian individuals, anybody overseas, it's getting pretty late there for you right now. Thanks for hanging in with us this morning. But that'll be available on YouTube, and then we are going to put all of the slides, all of the recordings in our university where you'll be able to access that. It'll take about 2 weeks, but the link is, you can go to university.vectorvest.com and you can access all of those. We're also going to send out an email reminder when they are ready and explain exactly how you can get access to it. So don't worry about it, but you're going to have access to these videos on YouTube here for a little while to come. Next is the slides. For those of you just joining us, you can download the slides. You can go to www.vectorvest.com/slides, and you can put in your email address and you can download the PDFs. You will notice, I saw a couple of comments come in, but you'll notice that there are some blank pages in there. No, slides are not missing. Those pages are for notes in the event you wanted to print them off as well. So that's for the slides. And then we also have an offers page. For anybody looking to renew your offer, we're already seeing some questions come in about it. If you want to renew your subscription, you can go to vectorvest.com/offers and you can see all of the offers that we have. If you want to renew your subscription or upgrade, anything you can do on that page. And just as a quick side note, those offers do expire at the end of tomorrow's last presentation. So 5 o'clock tomorrow, it's kind of like an options contract. Take advantage of those special prices while you can. But with that, we'll be back in probably about 10 minutes, and we'll move on to Steve Chappell. So we'll see you in a few. Stay tuned.